So, there's a lot of financial myths that people constantly get wrong. I see it all the time on Reddit or even conversations with friends. And honestly, some of it drives me crazy because it shows how much confusion there is out there when it comes to money, investing, and building wealth. So, I want to break down some of the financial myths that I keep seeing, and I'll share my own personal thoughts and experiences. Now, as always, I'm not a financial advisor. These are my personal opinions based off of what has worked for me. Always do your own research and figure out what makes the most sense for you before making any financial decisions. All right, let's get into it. So, myth number one, $1 million is enough to retire on. This is probably the biggest one I hear, and it drives me crazy every single time someone says it. People throw around that number like it's some magic retirement goal, but here's the sad truth: $1 million today is not going to feel like $1 million in the future. Inflation eats away at your buying power over time. So if you're around 30 right now and plan to retire at 65, that $1 million 30 years from now is going to feel closer to around half a million in today's dollars. And sure, the classic rule of thumb, the 4% rule, says you can withdraw 4% of your portfolio safely every year. So with $1 million, that's about $40,000 a year. But here's the thing: 30 years from now, that $40,000 is going to feel about $20,000 a year. Unless you're living a very minimal lifestyle, $20,000 a year is just not going to cut it, especially if you want to travel more or have any flexibility in retirement. So, what's the solution? You need to start early, save aggressively in your 20s and 30s, and invest consistently. The faster you hit that first 1 million, the more time your money has to compound and grow well past that. And please don't get me wrong, $1 million is amazing and insane, and everyone should be so excited to hit it. But people are treating it like it's the end goal, when really you just gotta let it compound just a bit longer and you'll be in a great position. And same with me when I started. Now I see it just as a milestone. If you want a comfortable retirement, you probably would need to get closer to 2 to 3 million depending on your lifestyle. Myth number two: you can't save and invest on a low salary. This one frustrates me because it keeps people stuck. I see so many comments. Well, I only make $40 to $50,000 a year. I possibly can't invest. So I guess I'm just not going to start. That is just not true at all. I started my career making 60,000 a year, not some huge number. But I saved aggressively because I made sacrifices. I lived in the cheapest apartment I could find. I paid off my car fast. And honestly, I didn't go out much. I had friends spending $300 a week at bars, upgrading their cars the second they got a raise, and wondering why they couldn't save. Meanwhile, I was putting around $1,000 a month into my portfolio. The key is not inflating your lifestyle as you make more money. When I got raises and bonuses, I didn't immediately upgrade my lifestyle. In fact, I invested more. And it adds up. Even on a low salary, if you live below your means and stay consistent, you can build wealth. Myth number three: trading options is just like gambling. Okay, this one really annoys me because it is just not true. At least not if you're doing it correctly. Here's the thing: buying weekly call or put options, sure, that's gambling. I 100% agree. You're making short term bets with low probability, but selling options is a completely different story. When I'm selling a put, I'm basically acting like an insurance company. I collect a premium from someone who's essentially betting that the stock will crash. If the stock stays above my strike price, I keep the premium, just like how an insurance company keeps your premium if you don't file a claim. Even if the stock drops, I don't lose in the same way gamblers do. I end up owning the shares at a price I agreed to, and I'm down on paper. And once I own those shares, I wait for it to recover. I then sell calls on them, which is now even more income. That's what's called the wheel strategy. Think of it like a casino. The gamblers are the people buying those risky weekly options. I'm the casino. I take the opposite side of the table, and typically, the house wins more often than the gamblers do. So, no, options aren't gambling if you know what you're doing and stick to a strategy that generates income rather than speculation. Myth number 4, leveraging debt is too dangerous. So this one is a little bit tricky, but there is truth to it, especially if you don't know what you're doing. But I'll start with this. Yes, margin and leverage can destroy you. I'm not recommending anyone go out and borrow money to trade. But for me personally, it's been a powerful tool because I use it carefully. Here's an example. I own a lot of ETFs and stocks at a very low cost basis. Instead of selling them every time I want cash, I sometimes borrow against them using margin. So let's say the stock I love drops hard, and I want to sell a put on it. If I don't have free cash sitting around, I will borrow margin as collateral. If I get the shares assigned and I feel overleveraged, I will slowly sell off my other stocks to pay it back. Back in April, the market was way down. At one point, I was sitting on $200,000 in margin. Did I panic? No. My dividends alone were paying the interest. And I was using that borrowed money to buy stocks and ETFs on sale. By May and June, the market had recovered. I sold off some stocks that had fully bounced back and paid off margin. And I kept the new long-term positions I had bought very cheap, like QQQ, VGT, Amazon, Google. And even if the market still didn't recover, I would have just simply waited it out, even if it took a year. The key is to respect leverage, not to fear it. Using it responsibly can help you grow faster, but again, it's not for everyone, and you have to understand the risks. And so these are just some of the myths that I see over and over again in the comments and over discussions. And honestly, I keep thinking that it's just stopping people from building real wealth. And the truth is, you don't need to be perfect, but you do need to understand how money actually works. And that is, inflation does eat away at your buying power, so invest early. You can save and invest even on a low salary if you're disciplined. Selling options isn't gambling. If anything, you're the owner of the casino. And leverage, when used carefully, can be a tool, and not something that should be feared. And guys, if this video helped you out, definitely drop a like and consider subscribing. I post new videos every week sharing my journey to financial independence. Thanks for watching, and I'll see you guys in the next video.